Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. Today is January 9th, 2018, and tonight I'm going to go into kind of an overview of a couple of things that are taking place in the Deep Dive pattern overview. So what we have here is a list of different types of patterns that will pop up regularly for different types of markets. And what I want to focus tonight on are the profit-taking indicators. And what you'll see here is it'll either be a high or a low. You can see a low here on the dollar and a high here on the euro. And then you'll have a number that will correspond next to it. And that corresponds to how many days ago, how many trading days ago did this actually trigger. So what I want to do is I want to focus on some of the profit taking, specifically the surge and the flow for a couple of different markets so that you can see in hindsight what it is that those indicators actually did. So we'll start off here with the dollar index, which has a low 4 meaning 4 bars ago. No surprise here, the euro has a high 4, though obviously inversely related for the most part. So we'll take a look at the corresponding data for the dollar index. We'll take a look here at coffee, and we'll look here at live cattle. So we have a couple of different types of indicators we're going to be looking at here. So we'll begin here with the dollar index, and that number that we are looking at, these are daily bars here for the dollar index. You can see that we actually had a trigger 4 trading days ago. So whenever you see a low or corresponding high, but in this case a low here for the dollar index, and it's with the number 4 in the circle, it means from 4 days ago. So the market did in fact find a bit of a base for the low, and the market obviously triggered back to the upside. So when you see these types of profit taking indicators, the object of them is that when the market falls off and really is ahead of itself on the short side, the profit taking is not necessarily always saying that we're going to have a base and the market's going to move higher, as it did in this instance, and perhaps you could point to this instance here. But you can also have a sell-off where it's this little plus mark here that the market sold off, it rallied, but sold off again. It's not there for the purposes of saying that the market is at a base. The primary purpose is that the market has fallen so far that there's an opportunity to obviously take some profits. So this is just one indication here in the dollar index. One of the other markets I wanted to take a look at is going to be coffee. So in my case, I just simply click on coffee. The calculations will be made here, and what we're going to come up with is another daily bar chart that will show coffee. And in this case, 4 days ago, if we take a look at this bar right through here, again, these are daily bars and this is coffee, back on the 3rd, we had 2 things that actually occurred here. We had a dazed high. Hopefully you can see it there at the bottom, the little pop-up window. Just look at the bottom of the pop-up window and you'll see a dazed high and a surge high. And if we go back to our process here, where we're going to take a look at, in this case, coffee, we had a surge high and a dazed high. In both instances, they're highs. They're telling us that the market has gotten ahead of itself, one being a reversal, which is stronger than just a profit taking by itself, but then as a profit taking. So if we take a look here, they're right on top of one another. So that's why it's gray and not necessarily the yellow that we are looking at before. And the market, in fact, did sell off, and anybody that had been long at that time would have wanted to potentially take some profits. And the reversal is telling us that there's another condition that's taking place that you want to be looking for the market to truly do an about face. And the systems, as a point of an example, are in fact short. Let me pull this up here. If we come to market signals and we come down to coffee, just to show you that that the indicators are telling us one thing, and they don't always correspond to what the systems do, but most of the time it does. So we've been short since the 5th, and we've been short since the 8th of January here. So we have a little bit of a profit going on here. And those indicators that I've been referring to actually did a pretty darn good job in pinpointing the fact that the market was going to do a bit of an about face. The last market that I'll take a look at here is going to be cattle, I believe. Let's see here. Yes, because we had a flow. So let's take a look here while this is popping up. We'll come back to the patterns. Here's live cattle. Cow is the ETF. We had a high flow. The other two have been surges for the most part. Here's a high 4. And if we come back here, you'll see this little green mark here, and it's telling us that the market has gotten ahead of itself and is going to do an about face, and it's looking there for some profit taking. So these indicators, when we actually look at them, the object is when you see it like a 0, that means something has happened today. And because we had so many 4s, we have a 4 in the euro, 4 in the dollar index, 4 in heating oil, 4 in natural gas. We've got a 4 here in wheat, coffee, sugar, cattle, gold. We have one back over here, another one for coffee, and we have one over here for copper. What those represent is there's just a lot of action that's taking place. Tomorrow, if we take a look at this chart, as soon as we get the next bar, these will all disappear. That's why I'm taking advantage of this particular chart, because what we show in this deep dive analysis, specifically in the patterns, is we show day 0, meaning today, then 1, 2, 3, 4 days, and what will happen is that as soon as day 4 occurs, day 5 occurs, then what will happen is that these will be wiped away and they won't show up. So I thought I would take advantage of being able to show some of these patterns so that you get a feel for when they occur, when I talk about these things, that you know what they actually look like given, a couple of days into the future. So that's why I'm focusing my attention on some of these, because there's just so many of the highs. Actually, many of these are high. I think the only low that we have here is in the dollar index, which is obviously the inverse of the high in the euro. So that tells us that over the short term, the last 4 or 5 days or so, that we're seeing a lot of overvaluation in the market, and that there's been a bit of a reversal that has taken place. Sometimes this will extend into a trend. Sometimes it'll be just a short-term little pop in the market, and the markets will reverse course again. But when you see these conditions, especially the high 4s, they're going to disappear, and they won't show up again until there's another signal. So the cutoff is 4 days, technically 5, because it's day 5 into it. So that will at least give you an idea as to what is taking place here. What I wanted to do is just focus a little bit further in coffee, since that has had a bit of a sell-off. We are short that particular market right now. We have a nice little profit going, as you can see here in the last couple of trading days. And if we take a look here at this most recent bar where we had the sell-off, a little bit of reversal on today's action, and that the open and the close are close to one another. It's not a doji, which is where they would be exactly the same using a Japanese candlestick formation, but they're pretty dead on. And whenever you have a long tail like that, it's reason to think that the market has gotten a little bit ahead of itself and is likely to reverse course. So here is a support level to the market. These again are daily bars, 24 being very, very strong. And if we cursor across here, you can see that the open and the close are dead on with that particular support level. So if the market is going to hold here, it better stay above in this case, the support is 125.13. That's what this represents right here, that it better stay in and about that level. You can see that the closing value is 125.15. So obviously we're right there. So tomorrow's action, even though the systems are still short, we might see a bit of a bounce here, finding the support here. But if it's not able to hold, then we would find ourselves coming back down to this lower level here. So the systems are going to react the way that they want to react to the markets. Obviously, a lot of these profit-taking, market reversal, and environmental change indicators are factored into our systems, but sometimes they're a heavy weighting, sometimes there's a low weighting, so you can't necessarily assume that we're going to go longer or short based upon these conditions, but they are there for the purposes of alerts. You should be looking at these markets, especially when you have a 0 or 1, that these conditions are live and active right now. Once we get into the 4s, obviously it's a little bit long-winded. They're into this. Obviously it's there for the purposes of showing what did happen, so you can get a weighting, and they factor into our some of our other analyses when it comes to the watch lists and knowing which markets are strong, which ones are weak. But bottom line is that we've done well in coffee, just using it as the example, and it's gotten a little ahead of itself now, and we'd be looking for that support level I was just referring to, and then we'll see what does take place with these two systems in coffee. We've got a 60-minute system, and we have a 120-minute bar system, so there's only two systems that are actually active, and we'll see how things kind of play out here in coffee. Coffee is a really, really good market to trade. It's very volatile. It's not for the faint of heart, but it is one of my favorite markets solely because of the fact that there's a tremendous amount of profit that can be made there. So in tonight's deep dive, I wanted to use coffee as an example, but do realize what these represent as far as the profit taking, the market reversal, and the environmental, and how to interpret these high and low figures and what these numbers represent. So I've had a couple questions in the last couple of days, so I thought I'd start to address them in some of the deep dive analyses. If you do have questions, I welcome them. I want your feedback, and I want to be able to improve the service. So if there are questions, please just simply go to the website. I'll show you exactly where to go. You go to contacts at the top, and you can send me a quick email and having me take a look at a particular market, my opinion on what that market is doing as far as whether or not it's a good or a bad market to trade, whatever the case may be. But I'm only going to focus in on the futures markets, and only those markets that you see listed here. There are a few more that I could discuss and talk about, but just simply look at the deep dive pattern overview, and these would be the primary markets that I like to focus on. So with that, I'll leave it at that, and we'll take a look at another market tomorrow. Thanks very much for watching.